Starbucks is a coffeehouse giant with a global brand. The company is now worth over $100 billion and annual sales are over $26 billion. So far in 2019, Starbucks has been one of the top growth stocks. But is Starbucks a buy? Well, we will see in a short while. But what about Marathon Oil Corp? FINVIZ expects 44.6% earnings growth over the next 5 years. However, the market does not seem too excited about the oil industry or Marathon Oil. For those of you who have observed, we talked about the potential move of the banking sector with Bank of America, Fifth Third, Wells Fargo, and others. And now the banking sector is starting to roll. In my opinion, the oil sector may just be next. So, is Marathon Oil a buy? Well, let's take a look. And at the same time, you'll see a stock market hack that can help make big profits. In the most recent quarter, Starbucks reported earnings and sales growth of 26% and 8% respectively. Those earnings results sent shares to their all-time highs. Analysts expect Starbucks to earn 70 cents per share on revenue of 6.67 billion in the current quarter. Fundamentally, the company has a strong record of growth, and that growth is taking Starbucks to China. In September, Starbucks announced a partnership with Chinese retail giant Alibaba to offer the Chinese customer smart speaker voice ordering and delivery. Starbucks is betting on China to help fuel its earnings and sales growth. Yet, the company is still growing in the U.S. with expansion of Starbucks delivers into Atlanta, Denver, Phoenix, Philadelphia, and New Jersey. Starbucks Delivers is expected to reach nationwide availability in early 2020. But is Starbucks a buy? Let's take a look at the chart. This is the 20-year monthly chart on Starbucks, and the symbol is SBUX. For disclosure purposes, I do not own any shares of Starbucks at this time. And for those of you who do own Starbucks, if you owned way back here in 2009, you've had a rocket ride all the way up here. However, at this point there, that was a top or a potential top. We've had a decline since then. It was near 100. It's now at over $82 a share. But I think that might be the peak, at least for now. Looking at the MAC, you can see the peak right here with the fast line starting to head on down. And I think because of the elevation, it's going to pick up speed. Now, who knows how far this is going to go down, and who knows how long it's going to take. But just simply looking at the MAC, that doesn't look good. Looking at the histogram, that looks pretty ominous as well. Same thing, price rate of change, RSI, stochastic, and the Williams. Everything's heading on down. Now, it may have been a great growth stock over the past several years, but at least temporarily, I think we've seen a peak. So what do you do when your stock peaks out? Well, you can either hold or you can sell. So this is the first half of the stock market hack. You've got to be able to have a stock and recognize a peak or a leveling off. Now, again, you can hold or you can switch into another company that maybe has better potential or lower risk. So let's go now take a look at Marathon Oil. So let's throw Marathon Oil Corporation into the equation and find out if Marathon is a good choice for value investors, or at least switching from Starbucks over to a less risky stock. So looking at Marathon's price to earnings ratio, it has a trailing 12-month PE ratio of 12.26. This level compares favorably with the market as the PE for the S&P 500 stands at about 18.01. And it's also favorable compared to Marathon's own long-term PE trend, and it's as well below the industry average of 12.97, the industry average for the energy sector. When looking at Marathon's price to sales ratio, it stands at about 1.69. This too is lower than the S&P 500 average, which is about 3.18. However, the company's recent earnings estimates have been mixed. The current year consensus earnings estimate has increased by 7% in the past 2 months, while the full year 2020 estimate has declined by about 12.7%. However, this does conflict with the FINVIZ estimate of 44.6% growth over the next 5 years. So let's see if the charts can make sense of this conflict. And we're now looking at the monthly chart on Marathon Oil Corp that goes back to 2011. The symbol is MRO. For disclosure purposes, I do not hold any shares of Marathon Oil at this time. So the important things to take a look at here in the price chart is the bottom there in 2016 with a very slight upward trend to the current level. So we're testing that upward trend line right now. Also, we're testing this trend line here going back to this time frame of mid 2017. We may or may not break that. I don't think that's really all that important. Again, I like the oscillators. So let's go take a look at the oscillators here. And definitely from 2016, the bottom there, to where we are right now, still above that -2. There's been a lot of improvement. So I think the trend lines in the price chart are less significant than this here. So nice trend line. We're only at about a -1, which is only a very slight negative. We're still within reach of that zero line, so that's pretty good. So the fast line and the slow line are continuing downward, but I think some of these other oscillators are showing us that a bottoming process may be starting here. We can see that in the histogram. You can see that the very slight trend upward there, just very, very, very slight. Moving to the price rate of change, we see only an attempt at an upward move. I think what's going to happen is some more sawtoothing down here, this -10 level. But if you go back to 2015, 2016, it's not really all that dissimilar. And again, you've heard me say this many, many times. The 2015, 2016 time frame, in my humble opinion, is very similar to the current time frame. So I'm looking for a lot of those similarities in the patterns. RSI, a relatively weak 33.22, but you can see that things are slowing down, maybe the initial stages of a bottoming process. Moving here into the stochastics, you see that the fast line is starting to close in on the slow line. It hasn't bottomed yet, but it does look promising. And the volume looks fine. And then the Williams as well. The Williams looks like it wants to bottom, at least in the initial stages of a bottoming there, not unlike this time frame here. So we may be a bit early in switching off from Starbucks to Marathon Oil. So to reiterate what we've talked about before in a previous video, the stock market hack is essentially holding on to a stock until near its peak, while at the same time you start searching for the market rotation into another sector. The financial sector may be a good one, but I think the energy sector is coming up too. So once that sector shows signs of a bottom, simply make the trade from the peak of one stock to the bottom of the next. Now you may have to hold some cash while one is peaking and another is bottoming, and that doesn't necessarily make that big of a deal. But what you do is you do that switch and then you do it again and again and again. Now, understand you will never catch the peak or the bottom, but you will lower your risks while hopefully maximizing your profits. And so for today, that's ChewDog Charts. Thank you.